Hi, I'm Segun Lawson. I'm CEO of Thor Explorations. Thor is a West Africa-focused gold producer listed on the venture exchange of the THX and also on the AIM market of the London Stock Exchange. We have our flagship gold mine, the Segilola gold mine, the first and still the only large-scale commercial producing gold mine in Nigeria, which produces about 85,000 ounces of gold per year. We have an advanced exploration project in Senegal, the Douta project, which has a global resource of 1.78 million ounces, which we are now advancing through to a preliminary feasibility study. And in 2024, we expanded into Côte d'Ivoire, where we've assembled a portfolio of early exploration licenses, in particular the Guitry license and the Marahui gold project. We've commenced drilling on Guitry, where we've drilled about 4,000 meters, and we're looking to advance that to a maiden resource before the end of this year.
Segun, good to see you. You're a producer and therefore producing cash. Everyone's excited. You're dishing out dividends. Life is good. Well, look, we better, because it's been a while, maybe remind people of a bit more detail about what you've got. And we'll kind of rip through the kind of three jurisdictions that you're operating in and where you're at with each one of those. So Segilola Gold Mine, Nigeria. I think last time we were sort of talking at the I guess trade-off balancing between the kind of deepening the open pit versus transitioning to the underground. Can you give us an update on where you're at with that?
Sure. I think the key thing since we spoke last is that the gold prices continue to rise since we were talking about this conundrum, or should I say inflection point of transitioning from open pit to underground. So this rising gold price certainly has an impact on the economics as to how much deeper you can go before transitioning to an underground. What we have done since we've spoken is continued drilling. We've released two sets of drill results. We continue to intersect mineralized lodes that continue below the design pit, and also that mineable widths at both open pit and underground. So what we want to do is continue drilling through to the end of the year, and then at that point carry out certain studies which will guide our decision making as to how much we can take out as an open pit before going into underground. You know, at these gold prices, the logic is that we will continue, even if it's just for a small amount, to take some more out as an open pit before transitioning to an underground. I think it just makes sense. But then you also understand, we also realize that we have got a very high strip ratio. Our ore body is, only a couple of meters wide, and there's only so deep we can go that makes it economic. So these are all things that have to be assessed in a study, and these studies are going to be carried out over the next few months through to the end of the year, and then we'll make those decisions. The positive we can take away is that we continue to drill these mineable widths and grades below the design pit.
Right, and what apart from the actual mining, what other work are you doing, geotechnical or otherwise, to kind of help understand how far you can go before you kind of need to start planning stope design and mine scheduling and all those wonderful things which impact margin?
So we've done a lot of structural studies. From a geotech perspective, we haven't had to do a huge amount. The geotech work we had done prior to this seems to suffice. There's a very, very competent granodiorite in the hanging wall that lends itself without any issues to underground mining. This decision making is really revolves around how much waste we can afford to mine and still be economic and profitable.
Okay. So I guess it's all down to price, but that is also affected by recovery rates and so forth. So far, it seems to be quite stable around sort of 93%. Are you able to optimize any more?
Oh, look, we've tried our best. 93% seems to be a steady state. That 93% does include 60 to 70% of that coming out from gravity, hence our low AISC overall. But I think 93% is a good number to assess how we're performing.
Okay. And I mean, given well, I think you're the stockpiles are sort of averaging about 0.84 from memory, that sort of number. I mean, how do you kind of manage the kind of blending of lower grade material with higher grade mill feed without kind of affecting materially and diluting margins?
Yeah, we've worked out where we need to be in terms of head grade for the plant. We want to land. We think the plant operates optimally, landing, between 3 and 3.5 grams per ton as a head grade. So we try and blend where we can, and with that throughput rate at that grade, we should land, round about the midpoint of our guidance, which we're tracking at the moment. So when we do get into these very high grade pockets in the pit, we dip into the stockpile, and the stockpile remains there for that reason, and also for contingency reasons. If there's any issues with the trucks or earth moving equipment, we always have that to refer to. But the mine plan has been designed for the stockpile to come in after the mining has ended and can just be processed through. The costs have been sunk already for that. And the stockpile, there's a lot of gold, particularly in this gold prices. There's a lot of revenue sitting on the stockpile at the moment.
And what about the? I mean, remind me how much you know about the underground? Obviously, it's much higher grade, but do you expect to be able to, I guess, upgrade that the up and coming resource for that, or does? Yeah. I just wonder how much work when you're sort of producing and cash is easy for you. How rigorous is the work that you do on something like trying to estimate where you may be able to see higher grades on the underground versus just getting on with it.
It's extremely rigorous in terms of exploring for it and defining these chutes. It's our top priority, finding additional gold on top of the DFS reserve. Really, because we've been through the barrier of repaying the loan and paying for the capex, and being in this really high gold price environment in this high grade deposit, we really think the priority as a company is to, put work into how we can add ounces to this. So that's all ongoing. Like I said earlier, we've continued to find gold underneath the pit, which leaves us in a nice conundrum whether or not to deepen or to transition into underground. Transitioning into underground, we'll look at the various options. One of the options which I quite like is even putting a decline in through some ore, which can pay for a lot of the development as you're going along. So it's a bit early to say the exact method or the exact point we will transition, but these are all priority goals we're working towards this year.
Right, and you've included some drone aeromagnetic in there as well. Has that helped? Has that influenced your thinking in terms of the near mine exploration drilling?
It's certainly helped us with the structural controls and guiding our hypothesis for the drilling we're doing. And it's actually quite interesting being in different jurisdictions in West Africa, because you look at Côte d'Ivoire or Senegal, which have other operating mines and a lot more data available and blueprints available. We've had to try and do that ourselves and test our different concepts. So the Aeromag has definitely guided that and has helped a lot.
Right. Okay. And in all of this, I sort of note that you're also commissioning your own rigs now. Is that's just an optimization component, or I mean, how does that come about? Why do you think now's the time to do it? Versus contractors, I'm talking about.
Yeah, I think that the first reason it's the time to do it is we've got our own cash now to do it. It ends up being cheaper, but being able to fork out the capex to purchase these rigs and deploy them in the long run ends up being cheaper than using third-party contractors. It also gives us flexibility. We don't have to commit ourselves to programs. We don't have to wait for mobilization times from third-party contractors. We can evolve our drilling programs as we wish. We can cut them short and move them to different areas at a much lower cost. And I think the third one being key is we can drill at a much faster rate. We're deploying 3 rigs in addition to the 2 third-party contractor rigs that are on the mine. So having 4 to 5 rigs going constantly now is a game changer for us. We've never been in that situation, so it certainly allows us to put more meters in, to re-enter historic holes with wedges and drill in different directions. And we really hope this opens up, the underground exploration for us.
It was kind of interesting. I was talking to a CEO literally a couple of days ago, and they'd kind of done something similar to you, and brought it all in house, and they saw a sort of tripling of output because they had realized that there was a kind of a lethargic process with the kind of outsourced consultancy contractor route, and all of a sudden they had this kind of more entrepreneurial view and sort of challenging each other internally. So obviously that's pretty magical change in result for them. But for you, in terms of the type of mining that you're doing, is it fairly conventional, or do you think there's operational innovation that you can bring to help reduce the cost and therefore your AISC down? Or what are the things that you're looking at to continue to drive costs down?
At the moment, it's conventional, but we keep looking at all our different options with our blast techniques, for example, with our consumables, where we've got a big advantage. We've got a very decent head grade, a high grade resource, and a head grade throughput to our process plant is part of the reason our costs are so low. In addition to this, recoveries are over 60% from gravity, so that also brings down the consumables. And then just the fact we're in Nigeria and we can use CNG to power ourselves, much lower than the diesel price, and having a lower diesel price in the country. So all these things contribute to having us land in a very low percentile in terms of global AISC comparables.
Right. Okay. Interesting. And just to remind me again, in terms of the life of mine currently, and I guess realistically what you're charging the team with doing in terms of extending that potential at Segilola, what do we need to understand?
The life of mine continues for another 2.5 years if we don't find another ounce of gold. The drilling we've done to date and we've released suggests there is more gold there, so we continue to do that and try and delineate more of that, and then bringing that into a mine plan. We've not only just done that underneath the pit, we've drilled small satellite deposits. They're small, but aggregating them then adds up, and then these are probably the low-hanging fruit, being able to scoop up 10,000 ounces here, 15,000 ounces there, and stockpile them at the plant, and continuing to drill through with our own rigs these other anomalous areas that lie within, 50-kilometer radius of the plant. So that's what the team is charged with. We know, we're generating cash. We know we've spent a lot of time trying to understand the structural controls. We've delineated anomalies. We've drilled targets, and then now bringing everything into a mine sequence is what we're aiming for.
Okay, so obviously Nigeria's been very important for you in terms of generating the cash to kind of release the shackles, as it were, and gold prices take a lot of that for you. So would you be? I mean, there's a lot of processes you're going to go through in Nigeria. When do you get to a point where you feel that you can maybe give increased guidance in terms of what you're going to be able to do? And I guess people will be looking to that kind of life of mine component because they want to see the cash keep flowing there.
Yeah, look, I think we have to take it step by step. Our first point would be an updated resource, and then looking at that resource, the step after that would be looking at how that's come into an updated mine plan. It's not a final line in the sand by any means. It's not a case of we're going to do a life of mine update and close down the mine. No, drilling is going to be constantly going on. We're going to keep updating the resource. We're going to keep testing this resource at depth. We're going to keep testing these satellite deposits. And we're going to keep updating the resource. So we would like to get to a point whereby there's a material life of mine extension. I can't say when that is, but we have committed to updating the resource at the end of this year, and then taking it from there, these steps that I've just spoken through.
Okay, so it sounds like you've got the money to do the drilling that you want to do, and we will wait till the end of the year to sort of see what that number looks like. And with regards to obviously, again, how you allocate your capital and your time, and more importantly, how you're going to drive that kind of growth story for the company as a whole. I mean, let's move to Senegal, the Douta Gold project. You've included the Baraka 3 into the PFS mine plan. I mean, how does that change things like shell optimization compared to with just Makosa East and North?
So those studies are going on as we speak. When we should get the final results for Baraka 3 in shortly. We'll press release those to the market. They're good ounces, not very difficult metallurgy, and we believe it enhances the total project economics because they're brought into the front end of the mine plan. So that's those studies are ongoing, and then the PFS will be out in Q4 as well, showing an enlarged mine plan which includes the original Douta project, Makosa and Makosa Tail, and then also the ounces from Baraka 3.
Okay. Interesting. So the math work, as far as you're concerned, relatively simple from what you're seeing so far. There's no refractory, no kind of deleterious.
From the work carried out
worried
today,
about.
yes.
Okay, brilliant. Okay, and obviously you'll also be carrying on the drilling, etc. Are you prioritizing between Makosa East, North, Baraka? I mean, what are you focused on?
At the moment, we believe we've drilled Makosa and Makosa East and Makosa Tail to, in some areas, 25-meter spacing. It's pretty much measured, so no more drilling required there. The only thing we would do if we were to go back there would be to take it down deeper, but at this moment we don't believe there's any need to. So all the drilling over the last couple of months has been focused on Baraka 3, and that's where we're prioritizing when we go back after the rainy season as well, because we believe we haven't fully tested this out. This is blue sky exploration upside for our shareholders. We're very pleased to have it, almost got the PFS away without it. But we think even the initial Baraka number is due to increase when we come back and continue testing all the other targets in that license, Douta West license.
Right, and again, just trying to make sure I understand the thinking of the team. It sounds like you're very happy to kind of get things going and produce cash and worry about kind of building out the resource and reserve numbers over time. What is the target here for the tonnage and I guess grade assumptions for a start mine life on this one?
So we had a global resource of 1.78 million ounces prior to this drilling, and half of that was indicated, so about 800, just under 900,000 ounces was indicated. We're looking to increase that 900,000 number as a reserve, and then come up with a mine plan based on that. So a mine plan where we're producing, 100 to 120,000 ounces per year. We haven't completed the study yet, so there are no numbers in the public domain, but that's what we'll be aiming to land about.
Okay, and so and the ore is what? I mean, how will you be processing? Is this a heap leach or
No. We're going for a conventional CIL to start with. There's enough oxide to start the plant with a conventional CIL. Yeah.
Okay, and sorry, you've done the work on flow sheet, but is that locked in now or? No.
So the PFS isn't out yet. So that's coming out in Q4.
It's not out yet. It's coming out.
So the flow, okay. So that'll be out in Q4 with a process flow sheet for the mine life.
Okay, interesting. And in terms of the team, have you got individual teams on site in different locations, or who's doing the heavy lifting on this project?
So we've got a great team in Senegal, headed up by local Senegalese. Great exploration team that's been there for years and really understand the geology and very committed and motivated. At should I say Thor level, we have an executive team that delivered the mine in Nigeria and the exploration there, and we continue to oversee all our operations across Senegal and Côte d'Ivoire as well. So we believe we've learned a lot going through a mine build so recently in Nigeria, in a country which didn't have a track record or a history of mine building, and we're very much looking forward to doing it in Senegal as well. And saying that, we do have an EPC contractor that built our mine in Nigeria that we have an excellent relationship with, that's been working alongside us for the preliminary feasibility study, and we will be looking to go all the way with them as well to deliver the second mine.
Okay, that's fine. And you talk about the local team, obviously that must help with in terms of like social support and permitting and the ESIA, etc. I mean, has it been plain sailing, or is it a very different? Well, it's a different country. Is it a very different process?
It's a different process. We haven't had any major issues. We don't foresee any major issues.
Okay. So it's different, but it still moves forward. Has it been easier in a way than Nigeria?
I would say so. In some ways it's easier, in some ways it hasn't been. In Nigeria we were learning, so was the ministry in some areas, because it had never been done in the country. In Senegal you have the Sabodala mine, you have the Massawa addition that's just been commissioned, you have the Mako mine there as well. You have a mine being built, the Douta mine as well. So, there's a blueprint there to follow. There's a process that the regulators are very familiar with, and in that way, it makes the actual process and permitting easier, process driven.
Okay. Well, we'll wait till later in Q4 and see what that looks like. And then I think Côte d'Ivoire, you kind of pointing at Guitry, but you also got Maharoui and was it Bundiali, I think. A lot going on there, a lot of opportunity going on. Is the focus pretty much on the drilling at Guitry? Is that where the spend is?
Yes, well, Guitry was a project we acquired from Endeavour. It had a great geochemical footprint. It had historical drilling on it before. We thought this was easily the most advanced project in our Côte d'Ivoire portfolio, and we went back to drill it based on a renewed hypothesis. And we're very excited and very pleased with the drill results that have been turning up. Very high grade, wide intersections, and remain open along strike and at depth. And we've only tested a very small part of the permit itself. So there's huge amount of potential here at Guitry. And while pushing along with that, and we've set up an office in Côte d'Ivoire and doing more reconnaissance, we picked up more ground. And the initial results from Marahui, to start with, were in the soils, which defined this long 5-kilometer anomaly that was in some parts 200 meters wide. And then we advanced that to rock chip sampling as well, and we were really thrilled by the rock chip results that came back for the entire strike length of this anomaly, from 29.9 grams per ton, 28, 25 for the entire strike length. So we're very excited to go back there. We're carrying out some geophysics surveys on both licenses early in Q4 this year, and after the rainy season we'll be drilling both licenses. So we'll go back to Guitry and continue to extend that, and we'll be doing our maiden program at Marahui. And as we mentioned to the market, we've set a target of a maiden resource in Côte d'Ivoire by the end of the year. I believe that'll come from Guitry.
Right, and again, do you have a goal in mind? What size are you aiming for? What size do you think you need to aim for? Do you know what I mean? It kind of feels like you've got this Australian mentality of like, with the sorts of greys that indicated here, that perhaps it's better to get going in an environment like this where you can take advantage of gold price rather than build this thing out and maybe miss this cycle. Do you know what I mean? I'm just trying to get inside your head a bit on that.
Yeah, look, I don't want to put any numbers out there just yet. But what I will say is it's an 8-kilometer by 5-kilometer anomalous area. We've drilled some fantastic grades already. They're open, and we're going back to drill them. And yeah, we're excited by the results we've had, and we think we should be able to have a decent size maiden resource which we can always come back to and continue to grow.
Okay, fine. Well, let's kind of maybe move away from the projects and the ops side of things, and talk about the benefits of being a producer in a high price gold environment. You're sitting on quite a bit of cash. You've decided it would make sense to dish out quarterly dividends. Why do that rather than plow it back in the ground?
We're doing both. We've increased our exploration budget. We've increased our exploration spend in Nigeria and in West Africa. We've increased the rate at which we're drilling in both countries. And it's also a case of we've got to have something to drill. We just can't drill. So we're drilling as much as we can, as fast as we can, and we've increased the amount we can spend on exploration. We've acquired additional licenses. We're doing studies. Plus, we think our shareholders, it's a good use of our cash, returning this money to the shareholders. And the share price has responded very well to us issuing a dividend and announcing a dividend. So, look, to answer your question directly, we're doing both, and we think we've got enough provision on our balance sheet to continue to do this for the minimum 2 years that we've committed to.
Right. Okay. So obviously, Douta is maybe the potentially next thing to come online for you. In terms of access to capital in a market like this, you demonstrated your ability and a route to market in Nigeria. You guys know what you're doing. Do you find if you will need capital, do you think it's going to be there when you want it, and will you be going back to the known sources, or do you think there's more new money which you're going to have available to you?
I hope it'll be there. I hope it'll be available. From the marketing we've done at the various conferences and speaking to the usual players, I don't see any reason why it shouldn't be there. The funding should be there. One of the key differences is we have a much stronger balance sheet. We will be deploying a lot of capital, an equity component from our own balance sheet to de-risk the project a lot. And hopefully the fact that we do have this track record and ongoing cash generation from another mine should make the cash easier to get to than it was last time to build our mine in Nigeria, should I say.
And maybe we should talk about what type of money that could be. Obviously, as a current producer, a cash producer, one would expect project finance to be available to you. This wouldn't necessarily be an entire equity play for you guys. I mean, what sorts of people have been talking to you? Because I always say, bankers and funders offer you money when the sun is shining, or offer you umbrellas when the sun is shining. So what sorts of conversations have you had?
The conversations have just been high level. The usual players around have shown interest. We part of what I do is constantly keeping our name on the radar of the usual lenders, and I think it's worth remembering that our largest shareholder is the Africa Finance Corporation that did finance the mine in Nigeria. So there's also a very strong relationship there and access to funding in that regard. But like I said, it's our options have opened up. We are generating cash. We have more of a track record. We're in a jurisdiction with a track record as well in Senegal. And hopefully, and also we're in an all-time high gold price environment as well. So hopefully we won't have any issues with the funding.
Okay. It's interesting times out there with lots of sort of new money coming in, and when I looked at the like of Tether trying to find as much gold as they can, that wouldn't have been a thought in my mind a year ago. You obviously with regards to the exchanges that you are on, the exchange that you're on at the moment. Do you think there's any value in looking at sort of multiple listings? Do you need the liquidity
in additional listings? Oh no, I think we've got good volumes, good coverage at the moment, and we're very happy with where we are. And our focus right now is growing the company, through our operations. So that's extending the mine life in Nigeria, delivering our Douta PFS and building our mine in Senegal, and then accelerating our activities in Côte d'Ivoire.
There we go. Thor Exploration, a growth story, folks. Segun, appreciate your time today. And it's really good to catch up with you, and I'm glad things are going well on the ground. And stay in touch, okay?
Thank you very much.